Yeah, it's funny. You got to just go live. That was awesome content, dude.
No, well, we're going to do it again. All right. So Chris cannot make it tonight. Thank you all for being here. Vitali is probably going to be here in a couple minutes.
Vitali's in the bathroom.
Vitali's in the bathroom. Bro, did you see my tweet about that today? Or no, I'll show you the tweet later. We have a bootleg Chris with us here today, who's going to be doing two things. Number one, he's going to be helping us break down what's going on with inflation. Thank you, 93 people, for being here. And thank you, Ride the Investor Guy, for your first live stream. Awesome. Thank you for joining. So he's going to break down what's going on in inflation. Second of all, he's going to pitch us a stock. Okay. This guy is going to pitch us a company. No one on the panel knows what the company is except me. And if we get the company right, meaning Vitaly and Carlos, he will each buy us a share individually of this company live.
Vitaly, it's Upstart. I'm telling you, it's fucking Upstart. They're trying to push this. They're trying to push this garbage on us.
So, all right, introducing bootleg Chris.
It's Pris Cattell.
Oh shit! Wait. Chris is not going to be here today. I'm gonna get a chance to talk.
You're gonna get a chance to talk.
Holy shit! What do I say?
He's like, I want to thank my mom and dad.
I want to thank my mom and dad for making
God
this possible. Before we, Chris, is that your name too?
No, I am bootleg Chris today.
Oh, I was joking that his name is Pris Cattell.
Wait. Can we talk about this charging thing for 2 minutes?
Yeah, let's get into we'll do charging, inflation, and then we'll do the stock pitch. Go ahead.
So, Carlos, and I'm sure we were talking about this on Discord, but I think officially Tesla has won. I think that's the official news that Blink, ChargePoint, I think EVgo, only Electrify America, I believe, is holding out to finally convert to the North American Charging Standard, NACS, and CCS is going the way of the dinosaur. Thank God. So I just want to point out two things because I went to the car just before this podcast started. This is what it is. This is what we are talking about. Is this clear?
Look how the Tesla.
Can you guys see this?
Fits the Tesla standard fits inside of the other one.
You don't understand. This is like 5 pounds in my hand right now. So this is the little adapter I have to carry in order to work with these goddamn Electrify America.
Dude, you know what's funny? Every time that they draw the CCS plug, they always do it upside down, and the way you have it, it actually looks like a smiley face.
It's so insane that this is actually a discussion. Like this is actually being discussed, or this giant thing. Like it's idiotic.
You know what it's like? It's a lot like when Apple started reducing the plugs and started running everything through Thunderbolt. People complained that certain things they wanted to have separate plugs. It's like it just makes more sense to consolidate the plugs, have everything bi-directional, right? Do you really want those massive monitor cables? Remember those gigantic cables? Run everything through it, and people bitch and complain, but it's just by what you just showed, it's clearly better. Who wants to carry that? Like whose wife is going to be plugging that thing in? You know, whose mom or dad, like an elderly person, is going to put plugging in that monster?
So Tesla does some intelligence. The reason they could do this this small is because they have intelligence built into their system that chooses between DC and AC. These guys, I don't know why. I honestly don't know why they'd engineer this, but this is separate AC and separate DC. I don't know why they couldn't figure out a little bit of electronics to make this work just like Tesla did. I have no idea.
Isn't that a band, AC/DC?
It is a band. Yeah. Congratulations, Amit.
That was actually a pretty good dad joke. I got to give him that.
You may go pinch one off now.
Somebody was asking that question about like who designed the CCS plug, and apparently it was designed by this massive committee.
It's a consortium,
which is why you get that. Inefficiency.
Tesla's also on that committee, but they joined later on after this was obviously done.
So what do you think of this, Pris?
Bootleg.
No. This is the question to you, Chris. This is the question. Okay, on a risk of not going on a team, we'll spend 10 minutes on this. Okay, 10 minutes. It's on the clock. That's it. Carlos Vitali, you can duke it out as much as you want. Pris Patel just bought a brand new gas guzzling Audi, and I have the text messages. I have and he can afford a Tesla, by the way. I have the text messages to prove that he doesn't care about Tesla. He doesn't care about climate change. He doesn't care about electric vehicles.
Farzad is in the chat, baby.
Gas.
Farzad is in the chat, baby.
Oh, this is great. Farzad's gonna love the. Oh, okay, Pris. Now you
bring him on.
You're gonna make Farzad be like, hold my beer and give me the StreamYard link.
So Pris Patel.
Sorry, I'm drinking. This is why I'm talking too much.
In front of two very big Tesla shareholders and one of the biggest Tesla influencers on the planet. Please tell us why Tesla hasn't won the way you think they have not won.
So we don't have enough time in the day.
No, 10 minutes. We got 10 minutes. 10 minutes. 10 minutes.
To answer your first question, until charging gets to 2 or 3 minutes, I'm not buying an EV.
What are you clapping for?
That was his Palantir.
That's what
Yo,
happens
your
when
bootleg
you-
Palantir thing fell over.
No, it's just funny because I saw your guys' faces, and it's like he put out the argument. He said, "Fuck you guys. I'm from Midwest America. I don't give a fuck about these electric vehicles. I want a gas guzzling automobile." That's what he said right there.
That's fine.
Okay, well, I'm not from Midwest America.
I know, but like that was the
One,
character.
Even dinosaurs have to
Two.
still roam for a little bit before we exterminate
This
them.
is true.
That's cool.
And look, everybody that I know loves their Tesla. I have multiple friends that own Teslas. They love them. One of my best friends owned a Audi and a Mercedes prior. Said he will never go back. His next car will be a Tesla, and the car after that. Loves it. I've never heard a bad thing about a Tesla. My personal preference, until I can get a charge in 2 or 3 minutes, I'm not buying an EV. It doesn't matter what the brand is, because God forbid I go somewhere and I forget to charge my car. I just don't want to be hassled. I want to be able to throw the gas
You have
in.
range anxiety,
Yeah.
basically.
It's not range
here's-
anxiety.
here's-
It's just
Here's
you
what I
know.
think. No, it's not range anxiety. Here's what I think the flaw in that thinking is. You're comparing the way that an electric vehicle charges to the way a gas vehicle fuels up, right? What is the impact in time? It's your time. You're saying if I'm running out, right? What is the impact to your time if you plug the car in every night and you leave the house every day with the charge that you need for the day? Every day you leave at 80 or 90% every single day.
And I am not disputing that. I am disputing the fact that I forget things short term. And just if I end up not charging it or forgetting to charge it, or it's very low.
Anybody with an EV in the chat, just let us know how many times you've forgotten to charge your car so many days in a row that you've ended up leaving without charge.
Steven, I don't think this is your argument,
Yeah.
Steven. I think you
Well,
just don't like
it's not.
Teslas.
It's
No,
like-
it's one of his
a bad
arguments,
argument.
but the point is you
What?
would need to forget so many times. You're also forgetting the fact that what if you're charging at home is automated?
Well,
This is another point. It's like
Hold on, but besides the
vehicle
automated,
itself
how far
used
is he driving? How far do you drive
daily basis.
averagely? Averagely. How far do you drive?
So
On an
I'm
You're
average
not
cut off,
day?
sir.
I
You're
am
cut
not
off.
driving far enough where it would even make a difference. It's just one of those peace of mind things.
No, but how often do you
Yeah.
drive over 300 miles?
Oh,
I'm just curious.
100 miles, maybe on the weekends.
300 miles.
Oh, 300. No, not. And that's why I'm saying it's just one of those things where
You're a dinosaur. It's a
Really?
Luddite
I am a
sort of
dinosaur.
response.
The other part of it is
100% I'm
this.
a
Okay.
dinosaur.
The other
100%.
part of it is this. Have you ever been in a situation where you've been driving and you've been like, oh man, I'm worried about finding a gas station right now, right? You've been in that.
Yeah,
We've all
no,
been.
never. I'm in New York. There's a gas station on every other corner. Unless you're in
Sorry.
Manhattan.
Yeah, you know, the thing is, if you're in the middle of nowhere, you're probably going to find a plug before you find a gas station.
That's true.
Wait, can we cut the BS?
If you're running out of
You know,
fuel.
Can we
that's
cut the
interesting.
BS? There's another reason you're not buying. It's not because of EVs. Give us like the real raw reason you don't want to buy a Tesla, because God knows you can afford it. So what else is the reason you don't want to buy Tesla?
My perception on the value of the company, me buying a Tesla.
No, the car. Why don't you want to buy the car? That's my question.
No, I mean, I prefer oil.
But why?
and-
I prefer oil. No, dude. What?
Those are you don't.
No, hold on.
No.
No.
I'm a
that is
shareholder of
ridiculous.
ExxonMobil. I'm a shareholder.
There
of
we go.
BP.
That's the answer
I'm a
I'm looking
shareholder of
for.
Enbridge.
That's
Energy
what I'm. No, and that,
Transfer.
I
You own
want you to
Exxon.
say that because
All right.
that's the honest truth. He has.
I support
has
the
an agenda.
companies that I invest in.
He wants
I'm a
Exxon to
shareholder
go
of
up. He
Tesla
doesn't want to
too, by
support the
proxy.
EV revolution. That's it. That
Okay,
makes sense to me.
that makes sense. But I love oil. What are you talking about? You love oil changes? Like that's not even a good reason to even say that. Like that means like you didn't think about the thing at all. Like you're not actually comparing EVs and gas cars at all. If you say that, if you say, look, I'm an investor in oil companies and I just want to make bank, fine. I can
I respect
understand
that answer. I actually love that. That's a capitalist answer. I fucking love it.
I am
Sure.
invested in oil companies, but at the same time, I
Buffett
like
would
the
say the
fact
same
that
thing.
When I go to an Exxon station, it takes me about a minute and a half to 2
You
minutes.
feel good about it.
to
Yeah.
fill up.
All those ducks you
And
killed.
whatever. Oil and gas isn't going away anytime.
See, it's okay to say that
But those-
it's not going away. No one said it's going away. Okay, besides Matt. Okay, no one has said it's going away. Oil and gas is here to stay for the next 100 years. I totally believe you. But to not see what's happening and to not invest in the obvious future that is occurring is sort of crazy. It's
Well,
anti-invest.
if you
It's
look at-
anti-capitalism. It's anti-investing.
Oh, 100%. If you look at the quickest growing car manufacturer in the US, it's Tesla. 100%. There is no question about that.
But this
So
is
why don't
what
you invest in
Farzad,
them?
this
So
is
why
what
don't you invest in
Farzad
them?
was talking about yesterday, where
Well-
he's like, you want to have these debates, but these arguments are just ridiculous. Like, at least you've admitted, fine, you have a bias against a company that Tesla is disrupting, which is like, fine. Then what that's saying is that there is no argument that can convince you. That's essentially what you're saying, is there's no argument that can convince me, because, as we started talking before we went live, that you're not buying a stock in a car company. You're buying essentially an ETF that's not promoting itself as an ETF. The cars are better. The charging at home experience is better. It's cheaper. The cars are more powerful. Over the air software updates. There is literally no reason to buy an ICE vehicle right now. Price parity. Price was the big thing before. Now they're at price parity with incentives. These Exxon shares or Exxon Mobil, they're all going to zero at a certain point. Maybe not like in 10, maybe not in 5 years, but it's a dying technology, dude.
Put up
And it's
Ryan.
fine to
Steven
say
doesn't
that.
give a
Ryan
fuck, bro.
Evers-
Steven's like, I don't give a
It's
fuck.
fine.
Yeah,
but-
put up Ryan Evers' comment. That's a great comment.
You can't put a dipstick in a Tesla and wipe off the lube. I get it now.
You check the oil.
Oh, I've never done that before.
That's
No,
fine.
yeah.
Oh,
I mean,
geez.
no, please don't in the chat. Don't take this as a an invitation to insult the guy. But it really is.
No, that's
These
a
arguments
joke.
are
That's a
arguments
joke.
are just absolutely ludicrous. They're just almost nonsensical. I mean,
No,
okay,
look,
fine,
I
you own
prefer
stock.
ICE cars at the moment. When the charge gets to a point where I can just do it and leave on the road, happy to buy an EV. Until that happens, I have no interest in it.
Do you realize that we're probably never going to get there. We're probably never going to get to the point where an EV charges in 5 minutes. We're probably not going to get there.
Maybe in 10 years, whatever.
I mean,
why
with that, you
would
need
it- why
solid
would
state
it-
batteries. You need solid state batteries that are maybe 20 kilowatt, 50 kilowatt hour batteries, really small batteries with tremendous energy density. We probably won't get there. But if that's the reason why you're still going to be paying the premium that you're going to eventually be paying to drive an ICE vehicle, to me, it's just it's a nonsensical vehicle that's not based in logic.
Yeah, I mean, there's two things that'll make me buy a nice vehicle. If the government makes me, or charging. Those are the two things that'll get me to buy a nice vehicle.
You're muted,
You're on
Vitaly.
mute, Vitaly.
Oh, I'm sorry. You said government makes you buy an ICE vehicle. You meant EV.
Yeah.
No, you meant EV. If the government makes
No, EV.
So right now the government is giving you $7,500 to go buy a car, and you think that's a bad? I mean,
I
for
don't think
you,
it's bad.
for you
It
as a,
just doesn't- it just doesn't
I
do
don't know what
anything.
that means. Does that mean we have to spin around? I don't
No,
know
it
what
means
that
it's
it's
means.
the hokey pokey. We got to put my foot in, or
No, like,
yeah, but the government did these same.
incentives
Hold on,
great,
the government.
but
The
just-
government did these same incentives in 2000, right after 9/11. The government did these same incentives to get people to buy. That's when the Hummer became popular. The Hummer and the H3 became super popular when it did those incentives, and gas prices went down to what, $2 at the time.
Well,
And they
oil
were
is
giving
cheap
you-
because of the government.
Yeah, and they were giving you incentives to buy those gas guzzling vehicles. So incentives work.
Oh, 100% they work.
Okay, so we have 2 minutes left on this, then we got to move on. So do you kind of feel, Steven, similar to me, I'm in the same boat as you, that because we missed the run up on Tesla from 70 billion to 700, we kind of don't want to buy it at 700. We don't want to put a crap ton of capital there, because then the bull case is 7 trillion, which probably could very well happen, but it's just a little bit harder than 70 to 700. Is that your hesitation to buying the stock? That's my question.
Yeah, but I'm a shareholder.
Your wife has like 5 shares. That's not the same. Like, I'm
She doesn't have 5 shares, and by
Okay,
her,
I'm talking
a
about you
flat share.
owning, being a proud Tesla shareholder. Why haven't you bought the stock yet? That's my
Listen, I have disagreed with the valuation the whole time. It's too long to go into. But
Well,
the
we
very
don't
short
have to, but I
version
just
is,
want to give you the
from a
yeah,
valuation standpoint, it's been too expensive for me to buy. It didn't make sense, but I'm changing my tune on that. When I said it was going to go down, it should go down by 85%. It went down by like 68%.
It did. Steven wrote an article on Seeking Alpha.
Okay.
It was kind of prophetic, and it went down pretty dramatic.
But it went right back up. And when you and I talked on air, I said it could just as easily go to 200, just like it was going to go to, just like it could go to 100 when it was at like 140. It's at 250 now or so. I think it can keep going. I mean, this is a company that continues to evolve, and they have so many catalysts on the horizon that this is a company that doesn't have to trade in a traditional valuation method. I get it. And while I have a hard time putting capital into it, I clearly see that this could continue going up. And when you think about the roadmap 3-5 years down the road, it's going to be interesting to see what he does with the robot and a few other things. So yeah, there's a path for this to keep going. I wouldn't be scared about starting a position and then dollar cost averaging. I wouldn't go balls to the wall right now at this valuation.
Oh,
But
that's fair. That's fair.
nobody
That's
can
fair.
predict the future. Like this could go up. It could go up another $50 or $100 in the next 12 months, especially if we get a bull market in 2024. The biggest thing that people need to remember is the Fed is going to cut rates in 2024. So what does that mean? It means cost of capital is going to come down. It means that interest rates are going to come down, so auto loans are going to come down. That's a huge catalyst for Tesla.
So that's a good transition then into CPI. So we're gonna spend 10 minutes on CPI, and then thank you 410 people for being here. Bootleg Chris is gonna pitch us a stock, and he thinks it's the best stock on the market that you can buy right now.
I never said that.
Okay, well, you said it's a good stock to buy.
I think
I'm
it's
trying to
really-
hype it up a little
Amit
bit.
is such a Amit is such a
He's such a-
yeah, he's
yeah,
such
instigator.
a flame fanner.
Because I know if I say best stock, then Carl's gonna be like, better than Tesla? No way. What do we got? What do we got?
There's other there's other great stocks. Like you try to paint me out like I'm total fan.
Like Palantir.
I'm not all in. I'm not all in on Tesla.
All right.
It's a-
Guys, we have 400 people here. That's great.
So-
Love it. But can you guys hit the like and subscribe? It's only 79 likes.
Yes, please like it. All right, here we go. So, Steve, let's start off with you. Inflation came down 900 basis points today from 4.9 to 4.0. Likely getting a Fed pause tomorrow, but there's a slight chance we might get a rate hike. First of all, what are your thoughts on inflation coming down? PCE kind of stayed flat. What do you think is going on right now with inflation?
Yeah, I'm not shocked. And can you do me a favor? Go to the second slide real quick. So not enough people look at the energy sector. I'm focused on commodities because huge driver of inflation because oil and gas are the largest inputs for manufacturing. Not to mention they are the basis for plastic, fertilizer, everything else under the sun. Those prices go up. Inflation tends to go up. You look at these two charts, it's following energy. And if you go to the next slide, which is a 25-year look at crude and then CPI, it's a pretty interesting correlation. And you go back to 07, 08, energy started going up. You got the huge spike in inflation, came straight down. Inflation came down. So if I wasn't able to overlay these, but it is very interesting. And with oil under 70, if the production cuts from OPEC don't completely screw us and oil can stay in that 60 to 70 range, I think it's going to keep coming down. But if it goes up to 80, 90, it's going to stay at 4, maybe even trickle back up to 5%. So I'd be very focused on commodity prices over the summer.
Okay, Carlos, let's start with you. What was your reaction to inflation going down to 4% today from 4.9?
It seems like it's making sense. I think this the video that we watched the other day, this is the most anticipated recession that's never happened. And so I think a lot of the reactions that the market would have had to a recession have already been baked in. And I think what we're seeing now is in the market, I think we're seeing a lot of this pause already baked in. So I think if we do get this pause and we make it official, I think the markets will come down. That's what I'm expecting.
Vitaly, your thoughts on inflation dropping like a rock this morning?
I just got a text from Chris. He says,
Where's he?
What did he say?
He says, I'm enjoying the rides at Disneyland. So F you guys.
He's going back to Disneyland? What the fuck?
No, he's having a good time. All right. So what's your question?
What do you think about inflation coming down from 4.9 to 4?
I think we talked about this already. I don't know, too many times. We said it's heading down. It's gone. Look, the Fed fucked up in the beginning. They kept printing money. Yes. But now they've got it all under control. We're going under 4. It's happening. It's over, guys. Stop talking about it. When can we move on from this? It's over. Okay. The market's gonna play around with this quarter point, this half basis point, whatever. It just doesn't matter anymore. Honestly, I've been buying stocks. That's the point.
What did you buy today?
I bought a little bit more Enphase for me and my kids.
Okay. Steve, did you buy any stocks today?
Today, I actually did not.
Okay. Carlos, you?
I bought some Enovix today.
Okay.
Actually, I closed out my Apple calls. I bought a bunch of Apple calls.
Were you in the
How much
green?
were you up?
Were in the green?
Yeah. I was up 70% right before they announced the
And
Vision
then they
Pro.
showed their shitty product.
Get this guy out of here.
Bro, Vitaly, I'm so on Carlos's side. This
He's
is
so
this is
done.
gonna revolutionize everything, and Meta's getting
It
their
will. I
fucking
actually like
ass
it.
handed to them. with this
Sure,
product.
sure.
But no, but
While it's getting handed, it's going to 300. I'm making bank.
All right,
While
we'll
it's
see.
doing
We'll,
that.
we'll see.
Sure,
We'll see the
Meta's
stop.
going to
We'll see the
400,
stopgap
not
to 300.
Well, no, I mean
But-
in the interim, these people have ignored all the signs that Meta is going back to $300. Everybody's ignored
But
it.
it's not
because
gonna be on the
they hate
metaverse.
it.
It's gonna be on advertising. So it's,
That's fine. Who cares how you make the money?
No, but the point is,
Palantir is up.
You know
I
what the
fucking
point is,
missed it.
Vitaly? Because the point is because you pump up the metaverse, and then when it suits you, you switch
right,
over
right.
to it's an advertising.
I don't want to stop what you were
That's
saying.
what the
Go
problem
ahead.
is.
Tell me about your calls. that
well,
you
your girl
made.
Kathy bought some of it though. So your girl Kathy's in it now.
She's gonna make. Yeah, she's gonna make some.
Wait, what
money
is
on
she
the-
in? Apple
She bought 174,000 shares of Meta
today?
yesterday.
I thought
Let's
she
see what-
sold it.
No,
Didn't
no,
you
we
tell me
talked
she
about
sold
it.
No,
it?
she
she
sold
sold-
Tesla to buy
sold
Meta.
it.
Sold Tesla.
She sold.
She was
Tesla?
rebalancing Tesla. It
She
just
was
got too
rebalancing.
high.
into
and-
Meta. I don't even understand that.
This is how I know you don't
You
watch
know,
my
right?
live streams because I talked about it this morning. If you were in the morning open, you would have known.
I don't. I don't watch the live stream.
Dude, he's working all day long.
Yeah, I'm actually doing shit.
Today,
Alright,
she also bought the trade desk. She bought 10,000 shares of TTD. So there's another
Alright.
one that.
That's amazing, though. I didn't know she did that. All right, so Carlos, so you were saying you're up.
Oh, I was up about 70. I think I posted it on the Discord. If you're not a member of our if you're not a Patreon member, you can see the trades. And I was posting it like live as it was running up during the event. I was up about 70% at a certain point, and as soon as they announced it, everything started to tank. And so I had a bit of a pullback, and I just waited a week. And I think now that the news is coming out, now that it's really settling in what this thing is, and people have had a chance to comment on it, it's been creeping back up. And I saw it today. It was up about 35%. I said, you know what? That's all I need. So I sold it at about 35 for 35% gain. And then I wanted to buy something, but Tesla was too high. So I just threw it into Enphase. I just said, fuck it. Like,
Okay, by the way, we've got to do an Enphase episode. A lot of people have been DMing me wanting, so we got to have.
I'm on Twitter too. I'm getting a lot of
everybody.
a lot of
Bro.
DMs
They're
about
like,
Twitter about
like, why did you guys haven't talk about Enphase? I was like, we did, but it was.
Well, they're making fun of they like use it to make fun of us. Like we're buying this like little SPAC bullshit company. I'm like, it's not the same as like some little eVTOL startup, man. You know.
Yeah.
Okay.
Well, we do want to thank Amit actually because he sort of sent an influx of people into our Discord. So
really, how many came? How many came that day?
I think you got us. We have now 32 Patreon subscribers, but I think 6 or 7 of them came that one day, probably because you sent them in. And
that morning,
we had our first actual chat. We're doing chats now every single week with the Patreon members, and we have like a stock talk thing on our Discord. So we're actually doing those. And the first one went off like without a hitch, and we're using Audia to store our stock talk.
I was listening to it last night. It was great.
Oh, you did? You listened to it? I
listened to it on Audia last. I got the notification. It got uploaded.
I was like, I gotta use it. I paid for the shit. I paid for the yearly subscription.
That was fun, and it was interesting using Discord as that platform because it feels different than StreamYard. It feels different than Zoom, even though it's the same thing. It just felt like
it feels more private, so I kind of like that kind of aspect of it. So anyone who's not part of our Discord, we don't usually pitch it, but please come join us. We actually very open to everybody talking about anything they want as long as they keep it professional and nice, and you can have any opinion you want.
Yeah, that's free, right? And that's free,
and that part's free. If you want our Patreon, of course, then you want to see some of our trades and talk to the private members.
By the way, your Patreon's $1 for those who are.
It's $5. Okay,
oh, it's $5. I thought it was $1.
It's
$5 minimum, up to 20, which we got. We got our first $20. Patron.
Who paid $20? That's awesome.
Dude, I saw.
I think it was it Tom? I think his name is Tom.
We don't want to call him out necessarily.
Okay, we called you out.
But that was pretty awesome, and I think the message that he wrote along with it was really nice.
Yeah. We got some nice people joining, so appreciate it for anyone who's in the chat as well.
Let's do this one question. But
yes.
Vitaly, you got one more thing? Go ahead.
Well, I was going to talk about SoFi for a second too, but go ahead. We were just going to discuss when to sell something, right?
And our worst the worst investment we ever.
Okay, so this is going to be the order for tonight. We're going to do this question for like 5 minutes. Then we're going to do Steve's stock pitch. That may be like 15, 20, and then we'll end it off with like worst investment in SoFi stuff.
Is it 5 for a year? It's 5 for a decade.
5 for life.
It's $5 a month. If you can afford it, you can. Look, the Discord is free. Anyone who wants to join, it's free to join the main Discord. It's only if you want to see like trades and talk to the private community. That's it. It's $5. All right.
And there's some other stuff.
And it's basically to support us. If you just want to support us and you like what we're doing, that's about it.
And if you join their Patreon, I'll tell you guys the story on a Discord space one day about how I kicked Kelly out of my Discord once, because that's a hilarious story.
We should do that.
Why don't you come on the chat and the one we're gonna do next week? I'll do it.
Yeah, it's only fair. You get to keep all of the revenue from this channel. We get to keep some from.
We're gonna keep all the tens of dollars.
John, should I answer this question? I don't get any part of that $1.99. You know what I'm saying?
So
let's exploit Steve for this
question. Before you answer the question, I made sure in the fine print that my sponsorship tonight went to the 4 of you, not just the Mitts pocket.
Yeah,
Okay,
so he already
that's very
paid
nice.
for. So the cat's out of the bag. He was
That's
going to
very
give a share of each. A share to each of us of this company if we could guess it, but he's going to give it to us regardless. He Venmo'd me the money, so I have to Cash App or Venmo you guys.
That's real nice of you, man.
That's really
Appreciate
cool
it.
of you, man. That's really cool of you. I think I'm gonna sell my car. I'm gonna sell my car and buy an Escalade. I'm sorry. I didn't mean it earlier.
He gave us a share of Berkshire Hathaway, right?
I wish. That would be nice. If I could give out 4 shares of Berkshire, hey, that'd be a good problem.
The A shares, exactly. I want the A shares.
Okay, Steve, let's get your perspective on this. 5 minutes, and we'll move on. How do you grow an account that has $1,000 in it? What's your answer to this?
It's a loaded question because there's a lot of variables. Probably the best thing to do would be throw in an S&P fund and continue to add to it till you get to 10 grand. And you guys have a base and then start investing in other things. I mean, it really depends your knowledge level.
But he's talking about growing the account, not just.
The S&P is going to grow safest. You also have to think not everybody is in a position to take on single equity risk, no matter how good you think a company is. So, or you could do 500 there and then maybe throw 200 in big tech, maybe an Apple or Microsoft, take a little bit more risk for $200 or $300. There's different ways to skin a cat, but if it's somebody starting out, I would weight more heavily.
So you are against taking that 1,000 and trying to hit a home run. You're trying to play it safe to get the growth. That's
just starting out.
How many, dude? He's saying get on base.
How many people hit a home run their very first time? A lot of people make mistakes and don't know when to sell. And, you know, you need to build up to those types of things. I think a portion of it should be safe. Yes. You can even go QQQ to be a little bit more aggressive in a safe way.
See, Ranger the dog was thinking, if you got 1K, you got a YOLO an option. He won't get you. Because like if you only got 1,000, you know, but I see your point, obviously. Vitaly, Carlos, any thoughts on that? 1,000, same thing as Steve?
You want to go first, Carlos?
I'm writing back Ranger the dog right now.
Okay, so I would throw it all into I would go straight to, no, with $1,000 I'm going straight to blackjack or straight to no, to be honest, look, if it's only $1,000, it's going to be hard to seriously compound your wealth because like unless you hit a home run out of the park and you wait a decade, because all of these plays take a decade. That's the thing. So nobody talks about that. Enphase took 10 years to get to where it was. Tesla took 10 years. Apple took 10 years. All of these companies take a decade. So if you're only putting in $1,000, yes, eventually, maybe if you pick the right dog or the right pony, you might get there. But I think the best thing to say is I'm putting in 1,000 and then every month I'm putting in 100. And then that's where I agree with you, bootleg Chris, that we would do something like S&P and QQQ. I would do that in the beginning to sort of build that base. I'm not actually not a very speculative guy. I would do that or take maybe 50% of that and then do 50% with something else, like start building a Tesla position, start building an Enphase position, start building a Palantir position, whatever you guys are into. But I would have a base, 50, 60%. Because people don't know everything about me, but most of my money is in real estate. This is why I don't worry when I buy Enphase. So if all of my money is sitting in I think, secure places where I'm not afraid I'm going to lose it, I just feel more comfortable that way. So hopefully that makes some sense.
Okay.
I think my answer is a little bit different from that because of the caveats that you mentioned that go along with the question, right? So you're just starting out investing. That's a huge, that's a big thing, right? So if you're just starting out investing, that's a big consideration in what I'm about to say. I started my my investment portfolio when I had only $900 in the bank and my business just failed. I had moved back in with my parents and I started it and I said, I'm going to take 10% of this. So I started my account with $90. And what did I do? I didn't buy the S&P. I didn't buy I didn't buy index funds. I bought stocks in companies that I knew. I bought my first share of Apple at $14.10 9 splits ago. And then I bought a little bit of Sirius satellite radio and some XM. The reason why I say with $1,000 is to do that is because let's be honest, like you're not going to grow $1,000 into a massive amount of money. It'll grow. You're going to have to continue to put money into this. There's no way you're going to put 1,000 into anything and get any meaningful returns. So it's about developing habits. What happened with that $1,000 when I had that one share of Apple is it forced me to start looking at Apple News and following the stock market every day. And when I would get a 5% move or a 10% move, it got me excited. I got to experience the ups and downs of investing. And I think that's what started to give me the conviction to put a little bit more money in and a little bit more money.
And did you sell out with your ups and downs?
Nope.
That's right.
I made that, and that's where I made a huge mistake with that, because I eventually like DCA'd into Sirius satellite radio, huge, and it was the same thing as we talk about with Enphase and SolarEdge. I hedged the two. I had Sirius satellite radio and I had XM, and I was like, no matter what, this satellite thing's gonna happen. Howard Stern just signed the deal. I was like, this is gonna be gangbusters. The problem was I stopped watching the portfolio, and when eventually XM, I don't know even what I was buying it at $2-3, when it shot up to like $30, they bought Sirius or something, and then I never sold. I ended up eventually selling out of it, but when I look back at the chart, I had like the same kind of returns that you had on like FUV, where it was like so obvious that you got to fucking sell this thing. But it's fine. The point is that with $1,000, what you're paying for is education. You're not paying for returns, and you got to put that money in the market and follow the stock market, follow it and DCA. And the reason why I say buy companies that you know is because it's a little easier to understand what the news is related to a company if you kind of understand the business already. Like I understood Apple really well. I was buying it and I was in the business, right? And satellite radio, me and my buddy who you met from Phil were watching it. So it made it a little bit easier. And then I was able to branch out and buy companies that I had nothing, I had no idea about. And this is before I understood market caps or charts or anything.
But also, you buy what you know because you're going to actually do the research on a weekly basis.
It's not boring.
To keep up. It's not boring for you. Like if me and you bought a lot of Truist, then it would have been up right now a bit, but I'm still not looking into Truist, what's going on a day-to-day basis. It's just not interesting.
I would only be looking at the price action.
Yeah, that's right. And the price is not enough to get a conviction for any of this stuff. So
right. So that's my answer with $1,000.
And this is what Chris would do. DPSD regional bank 3x leverage.
There you go.
That's how you make some fucking money out here, baby.
I really hope people do
Banks,
not do that.
baby.
He'd go into margin, borrow another 1,000.
Banks, baby. All right. It is time for the show of the evening.
I don't know how he got banks in it, but he got banks in it.
He got banks somehow, even through the chat. Steven, this is the best stock in the stock market. You asked me last night.
Why are you gassing it up like that?
Because we need to get people excited.
Just let it be.
All right, here you go, Steven.
Also, we're not asking. I guess
we got 15 minutes on the clock. Tell us why this is the best stock.
All right, so I scrapped the name. I'm going to try not to say it and screw this up. I saw somebody come on here and pitch you guys a stock, and all they did was read from the slide deck. Promise you I'm going to do a little bit of a better job than that. So this company generates a ton of money last quarter, and they do not report on a calendar year. That's why it says Q3 right now. So in Q3, they generated 14.6 billion revenue, and they made billions in net income. Go to the next slide.
What was the net income?
I'm showing you right now. So in Q3, they generated 3.2 billion net income. They had 6% year-over-year growth in it.
By the way, net income means profit, correct? That's 3 billion in.
Yeah, unlike you, who said in a freaking debate that gross profit goes to the bottom line.
Yeah, I meant to say adjusted gross margin. I meant to say adjusted gross margin.
Net income is your profit after taxes, write-downs, everything. Is your
All right,
net.
fine. Continue. Goodness.
Okay. So this is an older company, but it is still growing. 14% year-over-year quarterly revenue growth. Went from 12.8 billion last year Q3 to 14.57. So there is growth. Go to the next slide. And Carlos, I'm going to answer your rhetorical question. There are no headlines. Nothing for you to get excited about. So there's no headlines. So
he loves that question. That's how you know he's a fan of the show. He loves that.
It's a great question because he's right. A lot of market is based on sentiment. So, all right.
Can you just pause on that one for a second? Okay, 99. We had a run up at a massive run up
so
99.
This is a company that's never got back to the .com highs. So this company went parabolic in the 2000 run. 23 years later, has never gotten back to that. So now, next slide, please, Annette. Even though they've never gone back to their .com highs, they have grown a tremendous amount. So I put the 2000 fiscal year numbers versus the 22 fiscal year. And over that 22-year period, they've grown their revenue by 172%. They've added 32.64 billion in revenue.
That's not a lot.
For annual revenue, it's a 7.84%.
But it's been 20 years. It's been 20 years.
A lot of money.
Grow at 100%.
A lot of money. So their gross profits grown by 164%, net income 342%. So go to the next slide. So we'll maybe be able to put this slide deck somewhere so everybody can grab it. So I did all the calculations here. You can go to the next one. So over the past decade, this is a company that's generated 548 billion in revenue, 103 billion in net income, 156 billion in cash from operations, and 146 billion in free cash flow. Revenue's grown 12.94%. I'm not going to go through all the numbers.
That's per year, right? That's per year?
No, that's over 10 years, right?
10 years. So this is a company that knows how to make money. They're huge free cash flow positive, and they've allocated 55.31 billion to dividends and repurchased 84.83 billion in shares. They've actually repurchased about 24% of the company over the past decade. So if you go to the next slide, I made a chart showing their annual revenue, gross profit, net income, and free cash flow. Very slow trending line up, but it is very consistent. Cash flow machine. All right, go to the next slide. This is on a quarterly look since October 2020 of those same thing, uptick a little bit more now because they've diversified into other areas, and we'll get into that after I say what stock it is. So balance sheet is a fortress. Go to the next slide, please, Amit. So they have 8 billion cash on hand.
Damn.
Just over 15 billion in short-term investments. So they have just over 23 billion in on-hand liquidity. They have 1.73 billion in debt due within the next year and almost 29 billion in total long-term debt. So they have almost enough cash on hand liquidity to pay off their long-term debt.
What does 15 billion in short-term investments mean? What do you mean?
T-bills, that type of anything that can be liquidated with that doesn't have a maturity of a year or over. So if it was under long-term assets, it would be anything with a year or longer duration. So fortress balance sheet. Go to the next slide, please. So dividend stats. I like dividends. I like income. So first quarterly dividend was paid April 20th, 2011.
420.
$420. So shares were just about $21 at the start of 2011. Since then, they've paid $13.10 in dividend income, which is roughly 62% of the share price at the beginning of 2011. 11 years of consecutive dividend growth. Quarterly dividends grown by 550% since then. And the current dividend is $1.56 annualized, which is just over a 3% yield. And based on the forward 2023 EPS projection, it has a 55.14% payout ratio. So there is a ton of room for dividend increases in the future. Next slide, please. So
I think I know the stock, but
okay, don't say it. We're gonna ask you right at the end of the presentation.
Yeah, there's 3 more slides. So buybacks, they had about 5.4 billion shares outstanding at the end of 2013. As of the latest report, just over 4 billion. They have repurchased 1.3 billion shares over the past decade and taken almost a quarter of the shares off the table. So the graph on the right I made, which has blue is your common shares, and then in red is how much they took off the table each year through buybacks. So every year they are buying back shares. Next slide. So there is growth. The analysts are projecting 13% year-over-year EPS growth this year, and another 6.5% in 2024, and then another 5% in 2025. Not huge growth, but when you're generating the type of revenue and net income that this company is, it's substantial. So here's where things get very interesting. The last 2 slides, the valuations. I'm a numbers geek. And when you see this will, Carlos, explain to you why I had a hard time investing in Tesla. So this company is at the top. It has no name. I whited it out. So right now, I like free cash flow as my number 1 metric for profitability because it's cash in versus cash out. Net income, you have taxes, write-offs, everything else baked into it. So I think free cash flow is a little bit more of a pure number. So this company trades at $50.80 a share. Its free cash flow in the trailing 12 months is $16.8 billion. It trades at 12 times free cash flow. Its forward 2023 PE is 13.33. And based off their 2024, it's not Bitcoin. On 2024 numbers, it trades at 12.5 times. So I put in IBM, Broadcom, Alphabet, Apple, Adobe, Salesforce, Meta, Oracle, Microsoft, Tesla, AMD, and NVIDIA in there. And you look at the old guard tech, they're trading, 13 to 30 on price to free cash flow. And then there are some really big numbers on newer, more popular companies. Forward PEs are across the board. So you go into the last slide. I took NVIDIA, Tesla, and AMD out because they had very high price to free cash flow. So I wanted to make it more in line with old guard tech. So the average free cash flow multiple of the old guard tech is 28, about 29. So when I assign a 29 multiple to this company's free cash flow, they look 135% undervalued. Whereas an Apple right now, based on this methodology, would be 2% overvalued. So I have different ways of looking at things. This is one of the ways that I look at things. And this is kind of like, it's not the end all be all, but if a company is within a range of where I think it's undervalued, I'll do more research and due diligence. This is kind of my baseline if I'm going to really put the time in to look at it.
So Vitaly and Carlos, what's your guess?
Do you have any guesses, or do you want me to tell you what business on IT they're in first?
No, I mean,
they're in IT?
It's an IT company, yes. I'll give you a hint. So
no, let's get the raw guess. Let's get the raw guess.
Okay.
What's your raw guess?
Before the stock price, I thought it was AT&T.
Okay, so what do you think it is now?
I've seen that dividend chart, and they also had the same deal. They ran up a lot in the 90s, 2000 because of the internet was going to be a thing, and it was like, oh my god, and they were laying the pipes. They were going to be the foundation for this new thing called the internet. But no.
So you're going with AT&T? That's your final answer?
No, because it's not. The stock price is $15.
Well,
so
I cheated and I asked Bard.
Oh my god!
You
ruined the game.
Shareholder of Alphabet. I love that.
I can't use ChatGPT. I don't have enough Microsoft.
That's the best line. You got to tweet that. That's the best. That's the most capitalist investor thing I've heard.
I basically followed this guy, dividend streams here, when he talked about oil.
No, I mean it's gotta be Cisco.
It's Cisco. Yeah.
You really think it's Cisco? That's what you think it is?
What do you mean? Bard said it was Cisco.
What do you mean? We're supposed to play along with me. We're supposed to make them feel like they don't get it, and then we're supposed to.
No. But
you shouldn't have told us the stock price until I saw the stock price. I was like,
the stock price gave it away.
Because here's the deal: you're describing AT&T as well. They've been beaten up. You're describing AT&T a lot.
The problem, all the growth, is Cisco. I mean, they're growing slowly, as you pointed out, but I think people priced in. That's it. Their growth is sort of over, right?
It's a boring company. There's no headlines, but it is so undervalued based on where everybody else is. And this is a company that's generating tens of billions of dollars in pure profit, and they're no longer just a hardware company. So they're no longer just selling switches, firewalls, access points. They're in cybersecurity, and they have, I think it's around 25 or 30% of their business is now subscription model based with software. And they are seeing another line of growth due to those recurring revenue streams. And with the amount of capital that they are allocating toward buybacks, even the low growth, they're going to keep taking shares off the table, and their EPS is artificially going to get inflated because now their earnings from operations are going to get distributed across fewer amount of shares, causing EPS to continue to go up. And they've already said that they are committed to allocating cash to shareholders through buybacks and increasing the dividend. And they generate a ton of it with pretty low CapEx.
Okay, Steven, I want to get your reaction to this comment. Up 14% in 5 years. The question marks imply that that's a horrible growth rate. What is your kind of response as a more of a value investor to this comment?
Oh, people like to say I'm a value investor.
I mean, I know you're not a value investor, but
yeah, look, The first thing I said, it's not going to grab headlines. It's not a Tesla or an NVIDIA or an AMD or even an Apple or a Microsoft. Okay. It is a boring old company, but the market could go into a rotation into value at some point. And there are two companies that are going to look really interesting. And admit, I said at 128 to you and Chris in a private text, IBM's going to look real interesting. What's it at now? 138 in like a week?
Is it?
Because
I don't follow IBM because it's fucking boring. So like,
it's boring as hell, but it makes a lot of money.
I think you're making a great case to have this in your portfolio, right? But
it's a value trap, just like
I don't know that
it could be.
It's going from what you're showing now. If the things stay the same, you're showing a trajectory for continued growth. And for me, the dividend says everything. As long as they continue to pay the dividend and I keep growing my money, if it's not capital appreciation, if I just keep getting more shares and getting more dividend, I don't give a shit. The problem is I don't want to say the problem because that's an incorrect assessment of what I feel like you're doing is you're making a very left-brained argument. And I'm trying to think of an analogy that could make this make sense. Okay, say you're a baseball coach. You play baseball?
Used to.
Okay, so you play baseball. You're a baseball coach and you have a guy that's on your team that's a switch hitter. Okay. Now switch hitter is going to have a dominant side. So, but if you look at just their batting average, it doesn't quite speak to the value that player brings your team, because they can be put into situations to counter different pitches. They might have a better on-base percentage one side or the other. And so I feel like looking at the price to free cash flow as like the metric that says this company is 138% undervalued is the same as looking at a switch hitter and saying, well, look at their batting average and they're not as good as, say, the guy, if you're in the American League, my DH, right? But there's other metrics that you have to weigh in when you consider as a coach how you use that player, and in the same way how you allocate your capital. So yes, on that one metric, they're incredibly undervalued compared to a company like Apple. But now that we know what the company is, what Apple is doing and what Cisco is doing are vastly different things, right? And so I think they do
completely different,
and that's why I think they will have different multiples based on what you're based on what metric you're looking at. Oh
yeah, and look, Cisco is never going to be an out front company that people get excited about. That's just not going to happen. I don't know if Cisco will ever trade at more than a 20 PE. It's just, it's one of those stocks that has been forgotten about, written off, but it has been a very large generator of capital, and they're reinvesting into other areas.
But not for its shareholders, to be clear, okay? Because it has not done well in 20 years. And here is something I used to not look at in Seeking Alpha. Now that you can actually go and check out, okay, so you're like dividend scorecard. Oh, that's great. The safety is a B-, the growth says an A, but then you look at the actual statistics, and here, 1 year dividend growth rate, 2.68. What was inflation this past year? So almost sector 9%. Medium is 8%. So if you're talking about this is a great way to grow capital, you should just look at what is the current inflation? Are they beating inflation even with the dividends? They're definitely not beating it with stock appreciation. So here you have something that is under inflation. That means it'll never catch up. They're actually losing you money every year, even if they're paying you a dividend.
Steve, what's the response to that? What's the response to that?
And I made a similar mistake. Buying AT&T and Verizon because of the bigger dividends, but not looking at all the statistics around that dividend. So I similar thing, and I'm bag holding those as well.
Me too. And I think we both have Cisco in our dividend portfolio. We have Cisco, we have Verizon, we have CVS. I do have CVS. I have some of these companies that we're talking about that aren't necessarily exciting companies, but I find them as a good place, a good safe place to park some capital. And I don't think that you should be in all growth stocks all the time. I don't believe that either. I believe that there's a certain percentage of your portfolio that should be in somewhat safe growing companies.
Yeah, so
but I think you're making the case. I think you're making the case that this is like some sleeper that's about to go.
And I'm not saying it's going to pop. I'm just saying that this is, to me, a sleeper that continues to grow, that pays a very good dividend. It is rewarding shareholders through buybacks, and it keeps getting cheaper and cheaper. And look, if you go back to one of the first slides that had the price, if you take that big pop in 2000 out of it, it's been a gradual increase there. And it's not going to do what it's not. It doesn't have the potential to do what Meta's going to do, or one of those.
Forget about Meta. You could have bought Costco. That's an actual growing, and they're growing their dividend like 15% or something. So
Costco's dividend's a little low for me, though.
no, that's right, because you're chasing the yield and you're not actually looking at the growth.
I should disclose how I invest.
By the way, I don't have Costco anymore. I did sell out of it, but still, that is the better value play if you were to play it. Not currently, but that is the better value play.
So I have different baskets for my investments. And I have tech side.
So what basket does Cisco go into, and what are the metrics or the parameters that determine what goes in that basket?
So Cisco is in my dividend growth side because I feel that they have the potential to continue to increase dividends at a higher rate going forward because there's going to be less places for them to put cash. There's not many
higher yield.
Yes. Well, if the stock price keeps going up, the yield may not increase, but the annual dividend will keep increasing because their 5-year average growth rate will probably keep growing.
Mm-hmm.
But it's one of those places that I'm looking at for that reason. And because if value comes back into favor, this is a value name that could get very interesting because it is a tech name that has been left out in the cold.
It's a tech name. Like IBM is a tech name. These aren't the real tech companies you want to be invested in at all.
That's the backbone. It's not going to go away. That's
going to invest in a real.
Steven, you want to disclose you use a crap ton of their products as well.
I don't want to talk about it.
But the fact that you do have experience with the products.
Well, look, my buddy is in IT sales. This is what he does. Okay, he's one of those guys. He's a sales guy, and all he sells is Cisco systems. And we talk all the time. He does $70,000, $100,000 systems, and he works on commission. So he's pumping these things.
I know a lot of people with
these giant cards for servers, all the phone systems that you need, like especially if you're in New York City and you need to outfit one of those buildings to do any sort of business. What do? They call up his company and they just come in there and they outfit your entire company with Cisco systems. They're sort of like picks and shovels in terms of the tech space. They're not really like Apple tech, but they're like the picks and shovels where you need them. It's kind of like your Dell computers.
So look,
like you need their infrastructure.
If you are building out an office, okay, there's not many options for your networks. So if you're going to build out a 200-person office, you need 200 drops, which are wire drops for the desktops. You need in your server room, you need a bunch of 24 and 48 port switches. You need your firewalls. You need your access points for the internet. You need your cabling. That's the backbone.
Yep.
Then you need software for cybersecurity. And then you need networking software so you can see what's down, do all your traffic admin and everything else. Cisco does the trifecta of the three.
Yeah.
And as long as we have offices, companies like Cisco are always going to have a part in the tech world. Cisco's competition is ubiquitous, a couple other companies, and Cisco is the crown jewel of the networking space. Their Meraki product is arguably one of the most sought after in the networking world. And like I said, they diversified into software for the very reason that they realize that they can't just live on hardware. And they're making more and more money. So with the amount of...
That's a piece of information. Is that
true?
I
didn't even know that. But yeah, the AI thing, I'm not too familiar with what Cisco's going to do on cybersecurity with AI. I'm sure there's going to be a component of that. So I'd have to look into that also. But this is something that generates tens of billions in net income a year. And it's an established company. And you could get analyst chatter over it. And for a long-term stock, it'll probably keep going up slowly but surely. And look, I don't need to hit a home run every time. And that's why I like Cisco right now, because I think it's undervalued.
And now we all have a share of Cisco.
To use a baseball,
they'll pay you dividends every quarter.
To use a baseball analogy, it's a slow 5-year home run. Like you're running in slow motion around the bases.
Oh, it is.
Now, Steve, what if I take your $50 and I buy a couple shares of Palantir instead? Would you want me to do that, or do you want me to buy?
No,
it's messed up.
It's messed up.
So I have to buy.
I think
giving you each a share of Cisco.
Listen, I'll take a free share of Cisco. I have no problem.
I would only do it with your blessing to let me go buy something that's actually growing.
Do you want me to buy you a share of Palantir or buy you a share of Palantir?
No. You don't have to do that.
No. I think the point is you need to, it's for your own good. This is a prescription. Okay. He's coming in. He's the doctor. He's like, I'm looking at your portfolio. What you need is something that makes money. Okay.
All right.
He's prescribing you a dividend stock and you got to take your medicine.
Look, it's not the worst thing in the world because I have at least a similar belief that Intel, which is beaten down similar to Cisco, I feel Intel is like completely undervalued. In 2 years from now, we're gonna regret not buying Intel. If they do what they're supposed to do, come to America, use the CHIPS Act to make their own factories, to now sell their chips to everybody and become closer to a TSMC. So is that not worth more money in the future if they can do that? Of course it is. So,
and don't forget, they're going to fabricate for everybody. Everybody's going to use them. They're going to fabricate for everybody. And it's not just about selling Intel chips. It's about now your supply chain is domestic, not international. So you're going to have AMD go to them. You're going to have Apple with their M chips go to them for a portion of it instead of just Taiwan Semiconductor. It is,
if Apple comes back to Intel, that'd be quite a score.
Why would Apple ever come back to Intel?
I don't think
they're going to make chips for everybody.
It doesn't have to be CPUs. It could just be basic system controllers. Or
I think they'll fabricate for them, but I don't think they'll do the chip design.
No, that's what I mean. Fabricate.
Okay, so then yes, I agree. But look, Intel was something that I really liked a lot, and then I got mad because they cut the dividend. But they did. It's the same thing as other companies, but they did it for the right reason because they're investing in the future. And look, we're never getting away from microprocessors. Everything has a microprocessor, and Intel is one of the only games in town for it. And here's the other thing. Computers run on x86 chips. There's only 2 companies. ARM's not a company for x86. It's Intel and AMD. If you look at the gap between the two, I think Intel still has 75 or 80% of the market. And then on servers, I think they're 90% or more. I haven't looked at this quarter's stats, but there is a site Passmark that has the chart. So I can look at it later. But Intel is a sleeping giant. If you have time on your side, there's no reason it can't go back to 60 or 70 if you have 5 years.
60 or 70. Wow. Okay.
Well, I'm not saying overnight, but the next.
I know. I get you. It's been stuck at 30 for so long.
I was actually saying 100. That there's a bull case to be made. Intel goes.
Yeah, I think there is, because how much revenue can be brought in from the fabrication side, and it's not just one plant that they're making. So that's the other thing you got to think about.
Okay, let's talk about one last stock while we have you here, Steve, before we end out the night. Can we get your thoughts on this bad boy that's just going crazy over a month? Steve, you at $10 by the end of the year. What are your thoughts on SoFi?
I may be revising that public prediction.
What was your public prediction?
$10 by the end of this year, 100 billion market cap by the end of 2023. Sorry, 2033.
You got as bullish as Chris there for a second.
Oh my God.
I don't have enough calls.
So, Steve, you have a big position in SoFi. They got a price target increase to $14 today. Any other thoughts on the company?
Yeah, I mean, look, it's everything that I continuously say on SoFi Weekly. It's everything that I say on my Seeking Alpha articles. I don't think we need to regurgitate everything. The very quick pitches. I don't think the younger generation is going to be a sticky component for legacy banks. I think SoFi is going to be the game in town for the younger generation. And I don't have the stats pulled up, and I'm not going to give bad numbers, but the millennials are going to surpass Gen X in the next couple of years for the largest earners. And then you think about where the kids from 16 to 22 are going to bank. You look at all the things that SoFi has, and Galileo and the combination of the cyberbank through Technisys is very interesting because they went from being in talks with one large financial institution to 12 in the matter of a month, from the Q1 earnings to the fireside chat with JP Morgan. When you think about legacy banking and you really start to research it, 70 to 80% of the architecture out there was built in the 70s and 80s and has been updated with Band-Aid fixes. And they're not built for cloud infrastructure. If SoFi can make a name for itself, and I truly believe, knowing how the RFP process works for big organizations, when SoFi goes
RFP? What's RFP?
Request for proposal.
Okay.
So when you're going for a large piece of software,
rich fucking people,
or equipment or something.
How do I join that group?
So when you're going for large pieces of equipment or software, you're looking to do some type of implementation for like Workday or SAP or something. The company that is requisitioning it will reach out to a bunch of sales reps from the competing companies. They'll put out an RFP, and then they'll go through an RFP process, interviews, demos, pricing, and then they'll make a selection. So when SoFi is in the room for these 12 large banks, and they're also talking to other people that are trying to piece together what SoFi is doing. And then SoFi comes in and shows them, this is our tech stack that we are personally using. You're going to get the same thing we're using. That holds a ton of credibility. And when they start signing up these banks, it is reoccurring revenue every freaking quarter that just keeps going and going and going. That's on top of growing the loan book. That's on top of everything else that they're doing. And yeah, like Chris is saying, these companies are going to have to do it. Look, banking is much different. I don't want to just rant about this, but Vitaly and Carlos are perfect examples. Back in the 90s, how hard was it to go and open up a new bank account? And how annoying was it to move money around? Compared to
100%.
It was embarrassing. I didn't have it was so foreign to me and felt so disconnected from anything that I was still the guy that was like cashing my paychecks. Like I was going to the check cashing place and cashing my checks until my boss was like, what the hell are you doing? And he brought me into like Republic. It was Republic Bank at the time before HSBC. And he sat me down and went through the whole process. This is how separate it was from me. But then again, I came from a family where we didn't have a bank account. Like that's where we were at, right? So banking and money, it seemed so foreign and scary to me at the time.
So you got to remember that these banks are set up on a legacy platform. Mm-hmm. Branches, archaic technology, they're not set up for 2023. And the future generation wants everything instantaneously. They are instant gratification monsters. Amazon, me as well. I do most of my ordering through Amazon because you know what? Living in New York City, if I order it by 10 a.m., there's a good chance I'm getting the same product by 5 p.m., 6 p.m.
So you want to get on your car and go to the store and go buy it and find parking
it's
and risk damaging it on the way home. No, there's a million.
It's
efficient. I'm with you. Listen, I'm with you. I was an early adopter of ING Bank when they came out, and I had a ton of money in them until Capital One bought them, and then they eventually just got sucked into it. But I loved that bank, and that's what SoFi feels a lot like these days. It feels like the modern day version.
Most legacy banks do not offer a large yield on savings. And to some people, that may not be
I don't think any of them do.
But for some people, it is important. And you don't even have to lock it up in a CD or put it in a money market through an investment account. You're getting a 4.3% rate on savings as long as you do direct deposit, and you get $2 million in FDIC insurance.
Honestly, the biggest benefit is not that. The biggest benefit is that most banks are changing this, though, that you would get charged a late fee or some sort of not enough funds fee, insufficient funds. And that's just like the killer for someone trying to save money. And all of a sudden they're underneath the limit of $500 or whatever it is.
Yeah, $15
and you get, it's $30. Yeah. I think it's like $30-$40. So that's really the killer of those banks. But a lot of them are changing that. So I don't know. SoFi is going to have some more competition as it gets more people.
But to his point, they're trying to catch up with some. They're always going to be playing catch up because it's something that occurs like naturally to SoFi.
Even markets with Goldman Sachs, like.
And the other thing too is to his point. He brought up a really good point, which is like cannot go understated. Right now, Gen X, you and me, Vitaly, we are the highest earners right now, and that's going to go away in a few years. That's going to change. And, I remember when millennials were like the young kids. Now they're coming of age, right? They're going to be the highest earners. And that means that millennial mindset is what's going to be driving at least the retail part of the market. So the entire investment, not sentiment, but the psychology of the market and what makes it move is about to change.
So Carlos, here's the stat. Gen Z's income will reach $33 trillion and surpass millennials in 2031.
Can you bring that up? Whatever you're looking at.
I can link it.
Steve is technically challenged in these.
Yeah, well, I'm using two computers. So the next part is since the end of 2020, Gen Z is on track to increase its income from 7 trillion to 17 trillion by 2025. So these are people that never knew life without a cell phone, without a smartphone, without Amazon. They're going to be more sticky
without Teslas.
Without Teslas. I mean, look, it's a good point. And when they become the largest income producing, and then the generation behind them starts catching up is in the position that they were in. SoFi has a huge runway of growth because once they get your direct deposit, that's why I'm not doing my banking with SoFi. My wife's the boss. She does all the banking, and she doesn't want to switch because we're very sticky with the bank that we use.
Right.
So once they get this whole new crop, this is the best part.
We're gonna stay there forever.
People are not stopping having kids. They're going to continue to have an influx of people getting their first job. They're going to continue to have an influx of people taking out student loans, people getting married, people needing personal loans. And
for me, the big thing for them is once Gen Z does get to that age, what do you start thinking about when you're 28, 29, 30? Say you are thinking about getting married. You make the biggest purchase you'll ever make in your life, and you're going to buy a house. And when I go to buy, like I went to my bank to try to get my loan service, but I couldn't because of the way that my income is. But if I was, say, you know, a regular W-2 employee, it would be so easy to just go to my bank because they know my entire banking history, they know my cash flow, they know everything, right? Now, if I could have done that through my bank, I would have, but I couldn't. What do you think if you've been with SoFi since you're 21? And they can help you with that. That's when they really start making those purchases, and that's when
that's what we said about ING. Just remember that.
Yeah, but ING ended up getting bought out. Like I think ING would have been.
And you think under $10 billion bank can't get bought out by JP Morgan?
And that is
actually. If it does, it's gonna be a nice premium.
No, that is.
No, but I'm saying, what's JPM worth? Well, JPM's like a $300 billion business.
400 billion, I think.
400 billion.
They can easily buy that. It's like their lunch money.
And that is what I think Capital One did. Capital One, I think, bought them out and then just demolished, just crushed them. They turned it into Capital One 360, which was nothing. It was like you're saying, bootleg Chris. They put this like skin on it to make it look like ING, but it really was, like you said, this legacy technology and services with this like smear of glitter on top of it that tried to make it look fresh and new. But you knew that it was also.
And my last point on SoFi is it's a company that may not trade as a bank in the next year or two, for the simple reason that they could catch a tech valuation or a hybrid financial/tech valuation if Galileo and Technesis plays out the way that Noto and LaPointe are projecting it to play out. Because if that starts getting baked into analyst reports, and then the narrative starts to change, that's not just a bank, that's not just a student loan company.
It's a fintech.
It's actually a tech platform with these components in a national bank charter. There's a good chance that it may not trade as a bank, which makes it even more interesting.
I agree.
Well, it wouldn't trade as a bank until it reaches some larger valuation, until there is something like it's worth like a Wells Fargo. So we have some time for that to play out.
I agreed.
But that's a big multiple from here.
All right, so it's 10 o'clock, but I'll share one chart. Now it's time to sell SoFi, I want to point out. So anyone
is this this on the Discord?
Yeah, it's on the Discord. Come join us. We're talking SoFi as well if we have to.
Okay, so, you want me to share the screen, right? Okay,
yeah, I thought I'm sharing it, right?
Sorry, yeah, you're good.
So I posted this, and SoFi is in a big downtrend still, and I see resistance at 1140, and I do have a bunch of calls. I think everyone in this pod at this point has a lot of calls.
2-year calls.
We have 2-year calls. Yes, I only buy leaps. So we have leaps. We were buying at $5 basically, and so it might run up to 1140. And in fact, I will be taking some profits, not selling all my SoFi. I do have a lot of shares as well. But I will be taking some profits at around this resistance, even if it shoots up. And call me sucker, but it's up like 200% plus right now, these calls. So
can you go to the weekly on that? Oh, you can't.
No, this was just something I posted.
Right now. I just want to see the weekly on that.
So I just want to point out that we are coming up to a point where there is some resistance that I know everybody's bullish, but it looks like there's some strong resistance coming.
I feel like what you're seeing is this parabolic is baking in the whole pause, the Fed pause. This is my thesis anyway, that this is everyone saying, okay, we're going to bake in what happens when there's a pause. And if they do in fact announce it, I think we're going to start to see a lot of people taking profits off the table.
Oh, don't forget.
That's why I'm not going heavy right now.
August 26th. I mean, if the government doesn't come out with something, which I'm still not convinced it's going to happen, but if it comes back August 26th, then they're going to start seeing revenue from that in Q3. And Noto went on record saying that they will be profitable by Q4. So there are catalysts down the road.
5 cents away from profitability.
They are. No, there's absolutely catalysts. And but you don't go broke taking a little bit off the table.
No, and we should finish with that because you brought that up before, Vitaly, and it's so important and people don't discuss it. When should you sell, or maybe not when should you, but when does everybody personally feel that they should take a little off the table?
Let's go around the table. And I know what a middle say when it's down.
You're funny. No, I mean, like you sell.
What's the question? What's the question?
It's when do you sell? When do you sell a stock?
Sell or take some off the table.
Yeah, you start.
Me?
I think it depends
Yeah,
on how.
well,
No,
No, I mean-
dividend streams, Chris. You start.
Fake bootleg Chris. Look, what I'll say is that it's different for everybody because everybody has a different financial situation. Nobody ever got hurt taking a profit.
Well, for you, I want to know when you do it. This is about
for
us,
me,
not about everybody else.
Something like SoFi, I really believe in the long-term vision. So I probably will not take money out unless my investment thesis changes. But at some point, if it goes up a lot, and it look, I have a lot of shares. If it goes up a lot, there's a good chance I'll take my original investment out, play with the house's money, and if it retraces, buy back some of the shares, and then reallocate some of that money toward a dividend income producing asset.
Like Cisco.
So what about in general? Forget about SoFi in particular,
Okay.
because you're super bullish on it.
Yeah,
Just
in general,
what
if
is
I
your
go
rule?
up 100%, I usually take half of my original investment out. And if it keeps going up, I'll pull a little bit more off because I've been in too many positions where going up, and there's only one time. So I'm going to give two examples. There's only one time I got it right. I bought Cloudflare at 30 and sold it at an average of like 185. I think it topped out around 200. Only time I've ever sold anything completely out near the top. Every other time I screw it up. I don't trade because that's just not what I do. I'm not good at picking lows and bottoms. AMD, I could have retired if I got that one right. I was down on it for so long. I mean,
Same
Vitaly,
here.
you'll probably remember this. I was buying it when it was $1.99.
$2, baby.
Yeah, I had a lot of shares.
When did you
And
sell?
I was down on it for a good.
I sold at
4 years.
$250.
Oh, you just made my day, man. You just
I
made my
did.
day. So
12,000 shares.
I had a little bit more than that. I freaking was driving out of Atlantic City and I freaking sold them at a rest stop at 363. And I was ecstatic because I got almost all my money back.
Mm-hmm.
I lost like $700.
We're talking about $3.63.
Yeah, it's like 130 today. It's $1 million mistake. But in hindsight, I probably would have sold anyway at 12.
Well, no, but this shows that if you do have some conviction in something, you do take some off the table, and you can let half ride because it paid for your other shares. The other shares are free. So
Yeah.
once it goes up enough, the other shares are free. It's okay to take a little bit off the table and live your life. Okay.
Wait, so you sold it right? Hold on.
Go to like 20, yeah, right around
2012?
a little bit more, 2014, 2015.
Ah, yeah, right there. This is you at the gas stop selling it right there.
Right around there.
I sold it like right before it started taking off too.
Oh god.
So and it went up to 103. So you missed out on
it went
a
up to
lot
like
of money.
160 or 180.
it's
It went
heartbreaker.
up pretty high.
Yo, Steve, if you had hit that one, I mean, you'd be good for life. Same with you,
Dude,
Vitaly. You'd be
When
good for
I was
life.
at Bed Bath Corporate back in the day,
Yes.
because I was in their e-commerce division, Bitcoin was $6 or $7.
Mhm.
And we were talking about building a mining computer and mining it. My wife was like, just take $1,000 and just buy it. Don't build a mining computer. And there was no Coinbase or anything. Mt. Gox had just gotten hacked. It was so sketchy buying it. Said the hell with it. Went up to like 300. I'm like, fuck. So then Ethereum comes out. It's like $8. I go through the same thing. End up not buying it.
Your wife's like, buy Ethereum. You're like, nah.
Dude, my wife is so much smarter than I am.
That's why his wife has Tesla. Yeah.
Yeah. So
My
what
wife
about
told me
you,
to buy
Brad?
Etsy. That's another story. Before the pandemic, I bought Etsy at $20, 25. I forgot what it was.
Nice.
And I'm like, I only had a few $1,000 and I sold it at 35, 40. I doubled my money. I was like, I didn't tell her. So I just, and then it goes to like 180 or 200 or whatever. She's like, oh, did you see it? I'm like, well, honey, we don't actually have it.
He's like, what happened was he's drawing circles on the ground with his feet.
I'm like, what's your next pick? She's like, weed stocks.
Well, Vitaly, my wife wanted to put a boatload of money in Facebook when it IPO'd.
Mm.
And we still have our shares from when it IPO'd. But I was like, they didn't make money. Like there was nothing about it.
How are they going to make money? Exactly.
I'm like, I don't know how big of a risk that is.
And
like,
we
yeah,
were
it's
and back then
probably
I forgot what it was
We're
supposed
still
to
talking about
IPO
that.
at.
How are they going to make money?
It was supposed to IPO at like 20. It IPO'd at like 35. We bought it 19.
Yeah, it was supposed to IPO at 20 and we
1960
didn't get
or
in until
something like that.
35. Like as soon as the market opened, it was 35.
And it went down.
Yeah.
Yeah,
It went
to
down to
20.
13.
I was there. I was at work that day. I was like, I gotta stop. I put $5 grand into it and then Just gave it away. Gave it away. But
All
to
right.
answer your
Yeah,
question
answer the
about
question,
to
Carlos,
answer
yeah.
your question about cells, I think it really depends. I think every stock or crypto, you have to look at it differently. It's kind of like Vitaly will understand the analogy. It's like real estate. You can't say that there's a blanket reason to buy or sell real estate. It's so dependent on everything, right? Dependent on like the rental income, the area, what's it doing. It's so unique. And so for me, every single investment is its own little ecosystem that has its own rules about when you buy and sell. But I think some blanket rules are like what's his name? Bootleg Chris was saying, if any stock or
What is
anything
your real
runs
name?
up,
Is it Chris?
Steve,
I
right?
still
No, it's Steve.
Steve,
it's
as
Steve.
Steve was saying,
All right.
if anything runs up 100, 200% in a very short period of time, it's a good chance that you're going to see a pullback. So even if you want more of that, it does make sense to take at least your initial investment out, or maybe just sell the whole thing and buy it back in on the inevitable pullback, because there's going to be a pullback. But in general, the only things that have really made me sell, I don't really sell. I only sell like if I need the cash, and that's usually something that's not connected to the stock itself. It's some life event for me that I need, like.
Well, with
I don't know.
Carlos, I agree. Actually, I don't. If I'm buying a stock, usually I expect to hold it a while.
Expect to hold it for
I
a
don't
long
expect to
time.
hold it a week. First of all, I expect to hold it 6 months, a year, 10 years, depending what stock it is, of course.
Yeah.
But these SoFi calls that I bought, I didn't buy all of them to keep them forever, because you see the trades that I bought a lot of calls actually. So I'm sitting pretty, and not to take a little bit off the table and buy myself some plants that I want to put around the pool is irresponsible. Honestly, it's just irresponsible. And I'm too old to be irresponsible. I need to pay these bills. So I have always said, as soon as SoFi runs up to some resistance, a big one, like 10, $11, I'm going to take some money off the table. Even if it keeps going up, I'll still feel good about it. It's up over 200%. I'm not going to feel bad about it. I'm not going to regret it. And I'm not going to care. All right. So people need to get to that mentality.
The last
There's
big
one more. Go ahead, Carlos.
it's just a real quick story. The last time I made a trade like that, where I said I'm selling them and I'm taking some fucking money, was an argument that I had. I had my student loans, and I think I owed something like, I don't know what it was, like 14 grand. Student loan companies are the worst thing on the planet. They're just, their whole thing is trying to just get you for as long as possible and get as much interest as possible. And I ended up getting on the phone. They said that I missed the payment and there was going to be all this stuff. And this woman just pissed me off on the phone. And I just said, you know what? What's the fucking payoff amount on this thing? She was like $14,000. Went into E-Trade, sold some Apple, and paid that fucking bill just right there. And I didn't care. Because it's like,
was that the wrong decision, you think?
no. Well, looking back. Well, I don't know. Look, I mean, I'm saying it was Apple. I don't know what it was at the time, but I did make a point of saying I don't want to carry this debt anymore. Whatever returns I think I'm getting, it's like I'm trying to. There's a hole in the ship. You know what I mean? This debt is a hole in the ship. So just get rid of it. Yeah, and that's what and then the other time I did that was when I paid off my mother's part of the loan, because I had like a student loan for myself and a parent loan, and I was paying my parents' loan, but I didn't even want that on my mother's credit. I didn't want their debt anymore, and I actually ended up saving myself a lot of interest over the life of the loan that way. So I don't regret it.
And I was going to say, the one thing that you guys probably do that I do is, and I'm not advocating anybody do this, do not follow what I do, because
he's like, go to Vegas, put it on black.
But I'll sell covered calls against my position at the price I want to get out at. That way I can generate an income from it along the way. So hypothetically, if I want to take, let's just make up an arbitrary number, Palantir, if I want to take my investment out at 40, let's just say hypothetically, when it starts getting to 25, 30 and the call premiums get up, I'll start selling covered calls maybe a month out at 40 on part of the position. If it expires worthless, I generate a dividend from a company that doesn't pay one. And then I'll just, when they expire, I'll sell more calls. And I'll do it on part of the position. I do that with dividend stocks too. And I'll increase the dividend yield throughout the year. Omega Healthcare is a REIT that pays 9%. I've owned it for 6-7 years. And I sell 2 or 3 covered calls on it every year and juice that yield up to maybe 12-13%.
Yeah, that's fair. And Brad's comment is also great as well. My dad died suddenly last year, and it makes you reconsider how much you need to enjoy the now versus constantly caring about the future. And sometimes that means taking profit. So that makes a lot of sense. Steve, this was great. In the spirit of giving, since you gave us a share each of Cisco, which is about a $50 stock. I have officially
Make sure Chris gets his share.
No, they'll get their money. They'll get their money. I've
I mean,
officially.
I'll make sure Chris gets his share.
As soon as Chris gives me my cookies for reaching
I'll
20,000
get it.
subscribers
I'll make
that his
sure
wife made me,
Yeah,
I'll make
sure he gets his.
I want to do a
long time ago.
podcast when I find out how much money Amit has taken from me and Carlos. That's what I want to do.
It's a lot.
It's like $500 with the super chats. Okay. I should have done this a long time ago, but I've done it today. My membership is officially confirmed to the Freelance Finance Discord. I'm putting right now in the chat. I'm officially a super fan, not just a regular fan. It's $5 a month. It's in the chat. We have not done this before. Please, guys, if you got any value from Vitaly and Carlos, and you want to see their trades every single day and all the Enphase that Vitaly buys every single day.
Not every day.
Sign up for their-
That's right. You guys are huge on Enphase. Did you end up reading the article I wrote about them that I linked to you guys?
I don't read bear articles.
Why don't you?
It's not a bullish article.
Yeah, but why don't you join the Discord and let's
it's
have
only
this
$5,
conversation
dude.
there so everybody can enjoy everybody.
Hey, I pay
can
$10
get
a month. I'm officially $10 a month as a broke 25-year-old is going to you guys. So
No, that's really nice of you, actually. Thank you. I
will join the Discord.
Steve, you can join the Discord. It's free. I keep saying that. Everybody can join.
No, I'll join the
your
member
article.
one.
Post your article into the Enphase chat.
Yeah,
we
you
do
should.
actually read all. We want the Bears. We want the Bulls. I actually want.
It's a bullish article. One thing that
There's a lot of Enphase. There's a lot of Enphase bulls in there.
Yeah,
And there's a
I
lot
mean,
of, you know what we're seeing too?
Discord
There's a
now.
lot of people that are just now, as a result of how much we've been talking about it, that are researching the company. And so it'd be good for them to get your take on it.
The biggest thing is people need to start looking at energy outlooks. And while oil and gas is going to be here, renewables has the most growth. And when you look at where this is going to be in 2050, there's a huge runway for solar. And I am not a solar expert. I couldn't tell you which company is the best out of it. But from the research that I did, Enphase is right up there. And what they do with the microinverters and everything else, there is a real runway for them to capture a huge amount of revenue.
Vitaly's jizzing while you're talking right now.
Hold on, guys.
Vitaly's literally jizzing. I've heard the word microinverter so many times in the past year. I'm like,
Well, by the way, the thing is, before we all talked about it on this podcast, our podcast, nobody knew what the fuck a microinverter was. All right, not everybody knows in the chat what a microinverter is.
I was sitting in Vitaly's Tesla. He's like, they make microinverters. I was like,
Amit, do you mind just pulling up the last slide of the CPI presentation? I actually put the BP Energy outlook for renewables. I think Vitaly and Carlos, I really like this slide.
Yes, absolutely. Bring it up.
I love me a good chart.
So I don't make up bullshit numbers. Like everything I get is from real credible sources. The new momentum is due to what happened in Ukraine and Russia and everything else. But when you look at how much more solar there's going to be and how much more renewable there is going to be over the next couple of decades, not to be in some type of renewable stock is crazy. Like I like exposure. I am not a investor that pigeonholes into one segment. I own big tech. I own oil and gas. I own financials, ETFs and mutual funds. Renewables, I have some plays. NextEra, STEM is I'm sure you guys have looked into that at some point. But look, Enphase is very, very, very interesting, and their numbers look very interesting. And we look at their growth rates, and you start looking at what the industry is projecting, and then you start looking at the IEA and the EIA, their reports about what's going to happen. It starts getting really interesting.
We looked a little bit into that.
And then you hear that there's more investment in renewables now than there is in building coal and gas plants. The future is evident.
And wasn't it? This was the first year that solar created more energy than what was it called? Coal. I think it was coal.
I forgot the stat, but yeah, something.
There was a stat where it's finally inverted.
It's being inverted.
Listen, it's not by much, right? But what you're saying, it's not by much, but we're at such a small penetration, and coal and these other industries are already mature. So
yeah, and something I'll say about the oil and gas people that I really don't like is
they smell bad.
It's a situation of we need all sources, and the number one thing should be eradicating coal. like no matter which side of the stance.
So you don't have any coal stocks, I can tell.
I'm sure I do in an ETF or mutual fund, but
right.
as individual, no. But
Do you
look,
have what SPCD or SPHD?
from an energy standpoint, it is a situation where we should really try to focus on eradicating coal, increasing solar, wind, oil, and gas. And then after coal is eradicated, because that's the dirtiest form of energy, then you start working on other things. But the other thing is energy demand is going to increase 50%. That's not my number. That's a fact from the EIA, 50% by 2050. You are going to need.
That's an understatement, by the way.
Well, if we get to 10 billion people on the planet Earth by 2057, which is where the projections are, you're adding another 2.2 billion people on the planet. So
here's where I'll push back at that. I'll push back at that. I mean, it's a staggering number, but unlike coal or fossil fuels that need to be sourced, a lot of the energy is just about capturing it. It's raining down on us. We just need to capture it. So yes, there still has to be some production, but if you just have some batteries and more solar panels, the energy is coming for free. So all of those costs involved with sourcing and also moving the energy, like the coal and the oil, from where it's sourced to where you need it, all that goes away if you start
and
to do
that's
these
why
things
there's
locally.
such a runway for companies like Enphase, because there is so much more energy demand that we're going to see over the next 3 decades. And when you put into perspective how many more people are projected to be on the planet, it's the size of India. Picture another India on the planet.
Well, not if Bill Gates has his way. I'm sure you've seen the.
Oh, geez.
Yeah. So you start looking at it. We should do an energy focused episode.
We should. I think we do it every single week. But yeah, I'm glad you brought that up. So it shows you're not only a value investor, you're also sort of a growth investor. Assuming you bought some Enphase, right?
Maybe.
Okay, so he's not a growth investor.
No, he's in.
Steven loves to talk about this stuff, but pulling the trigger, he's a little bit scared.
He just went. I went on all Qualcomm.
No.
Or Cisco.
No. But no, I do have a little bit of Enphase, STEM, and Nextera.
Right. Okay, I like Nextera actually a lot, and they're an old gas company that's converting to
for a long time,
and they're rebranding and doing wind and solar.
They just sold, I think, the last of their gas assets, or they're a large portion of it.
Yeah.
Okay. Steve, you killed this, man. Thank you for being in for Chris. Thank you for pitching us this stock. Thank you for the share as well. It means a lot. And this is a great
episode. I'll try to
episode.
get a burgundy hat next time.
We'll let Chris know that he can be a weekly guest on our new show from now on.
Yeah, I mean, if you guys want to do a Tesla episode, I'm happy to do it at some point.
Like an actual full debate on
Tesla.
Tesla.
Like an actual full-blown thing.
Yeah. No, Carlos will be able to flex a little bit on that one because instead of moderating, he'll be the star of the debate. That'll be good.
Well, we just go at it. Look, I'm not going to change your mind. I could already tell I'm not going to change your mind, and you're probably not going to change my mind. But
no, you may change my mind.
Maybe.
Oh, the bigger man. The bigger man.
No,
that's good to know. That is good to know, because I don't. It's not that it's the point of having a debate, and Amit will test this, is to try to convince the other person. That's your goal. I'm trying to make a convincing argument that what I'm saying is correct.
And I've already changed my stance on Tesla. I just haven't personally bought shares with my money. My wife has bought shares with her money and probably our money, but I haven't put it in from my money. And I went from being a bear to being neutral, and I'm starting to get to the bullish buy case. And I think the valuation, like I said before, is less of a concern for me because I see a lot of catalysts. And look, nobody can predict the future, but the Cybertruck is either going to be a home run or a dud. And I gotta think it's going to be a home run, not a dud. It's not going to be some middle of the road thing. It's going to be
it's not going to be. It's too polarizing. Not to.
I think it's going to be very big. And look, the big thing that got me to switch my view was the fact that they started generating a gross profit from energy and services 2 quarters ago. Prior to that, I think it was 88% of their revenue was vehicles and 100% of gross profit was from vehicles.
Yeah.
The second that they started generating gross profit outside of automobiles, that was a big changing point for me because it showed they could generate a profit in other areas. It's not just generating revenue. And to me, that was very interesting.
Okay.
Ugly home run.
He's calling the Cybertruck ugly, basically, which I kind of agree with, even though
me too.
Yeah, no, I think it was ugly the first minute I saw it, but I still put in a pre-order, and around 2 weeks later, it was
Now,
beautiful.
listen, I've seen it in person twice. It does hit you differently when you're standing in front of it. Like I did a video. Maybe we should post that. I did a video when I went to the Peterson Museum, and like you're not supposed to touch it, but I knocked on it just to see, bro. It's like this thing is fucking. This is a tank.
It's Mad
dude.
Max shit.
It's a fun. And the thing is, I got underneath it, right? The way that they had it set up with the front suspension was all the way up and the rear suspension was all the way down to show you the flex and to show you like the cyber quad getting into it. You just never seen ground clearance like this. If any of you guys is like a rock, like I had a Jeep Wrangler for 7 years. It was my favorite vehicle. And to this day, if they make like a really good electric Rubicon, I probably would get it. What you're going to be able to do in this thing is insane. Like anybody that's into like rock crawling, this is the truck for you, right? If you're into and if you're like fast trucks, this is also going to be the truck for you. This thing's it's faster than 0 to 60.
I just want to get my groceries in the Cybertruck.
You're gonna be able to throw your whole house in the trunk, dude, in the front.
You don't understand. I think it's a showstopper. I think
So
every rap video is gonna have that thing. I'm telling, and they're gonna have the Vision Pro.
That's a good point.
All right, guys, we got to end it there because it's getting to 1:30, 1 hour 30 minutes. This was awesome. Thank you, Steve. This was great. Thank you everyone for being here. We held about 570, 580 the whole night. We'll see you tomorrow.
See you on Discord.
See you on Discord.
Bye.
Bye, everybody.
Bye.